All right, welcome to this explainer. Today we're doing something a little different. We are stepping straight into the war room. We're putting ourselves in the shoes of energy policy planners facing one of the most high-stakes geopolitical challenges out there right now, China's energy security and its incredibly complex relationship with the Middle East oil nexus. In a world where a single news headline can totally rattle global markets, figuring out how to keep a massive economy running despite international tensions is, well, it's a monumental task. It's this fascinating high-wire act of logistics, diplomacy, and pure economic survival.
So let's jump right in. As planners whose literal job is to keep the world's largest industrial engine running, our very first reality check is pretty staggering. 11.6 million. That is the record high number of barrels of crude oil we import every single day, based on our 2025 data. It's a massive, almost hard to wrap your head around figure. When you need that much fuel just to keep the lights on, to maintain daily operations across manufacturing, transport, you name it, you realize pretty fast that domestic production alone just isn't going to cut it. We are structurally tethered to the global market, which makes us incredibly vulnerable to global shocks.
But you know, what's truly precarious isn't just the sheer volume, it's where it comes from. Despite our absolute best efforts to diversify and find new partners around the globe, half of our entire national supply is deeply reliant on just one highly volatile region, the Middle East. When 50%, and in some seaborne estimates, we're looking at up to 57% of the crude oil keeping us running comes from places like Saudi Arabia, Iraq, the UAE, and Oman. Our economic stability gets completely entangled with Middle Eastern geopolitics. If things go south over there, there is simply no way to replace that kind of volume overnight.
And honestly, it gets even more precarious. Because it's one thing to buy the oil, right? It's a completely different challenge to physically get it home. Nearly half of all those crude imports, roughly 45 to 50%, must physically squeeze through the Strait of Hormuz. We're talking about a remarkably narrow waterway right in the Persian Gulf. By relying so heavily on this one specific geographic transit route, the strait goes from being just a line on a map to our single greatest physical vulnerability.
So, let's look at this closely. The Straits of Hormuz threat, evaluating the choke point.
To really evaluate this choke point, you have to understand that the strait handles about a fifth of the entire global oil trade. And out of everyone importing oil through that corridor, we take the absolute largest share. A disruption here isn't just a bump in the road, it's a direct, critical threat to our immediate supply lines. Plus, the diplomacy here is wildly complex, especially when it comes to Iran. We actually buy the vast majority, between 80 to 90% of Iran's exported oil. That's about 1.38 million barrels a day. But thanks to intense international sanctions and great power tensions, we're forced into some very careful, high-risk tactics just to navigate those waters. It often involves literally rebranding the origins of the oil, essentially slapping a fake mustache on a supertanker and disguising it as Malaysian or Indonesian crude, just to make sure that critical energy keeps flowing.
Which brings us to the ultimate nightmare scenario planning prompt. What actually happens to our economic security if a major conflict effectively blocks this waterway? We have to model out the catastrophic risks here. We aren't just talking about paying a bit more at the pump. We're staring down the potential unraveling of global markets and massive threats to our domestic stability if millions of barrels of daily supply literally vanish in an instant.
Look at our baseline risk here. We have a massive structural vulnerability, an overarching 70 to 74% total national import dependence. We simply do not produce enough crude at home. Because of that structural deficit, the immediate fallout of a strait closure would be absolutely brutal. Now, yes, our economy is progressively getting less oil-intensive, thanks to huge strides in electrification and public transit, but those short-term shocks would still hit us incredibly hard. We'd immediately face severe price spikes, skyrocketing inflation, and these crippling surges in industrial costs that could absolutely stall our economic growth across the board.
Okay, so how do we protect ourselves? Mitigating shocks, building the shield.
Knowing those catastrophic risks, we can't just cross our fingers and hope for world peace, right? We have to engineer our own resilience. It is absolutely imperative that we defend ourselves and protect our access to affordable, high-volume supplies. We have to build a shield, and the core of that defensive shield is exactly 1.4 billion. That is the awe-inspiring volume of barrels we have successfully stockpiled. Through meticulous planning, we've built strategic reserves ranging from 1.3 to 1.4 billion barrels. And this isn't just sitting in an underground cave somewhere. It's this expansive network of strategic state stockpiles, commercial floating storage out on massive tankers, and bonded tanks holding foreign oil in customs zones, which, by the way, helps secure even that heavily scrutinized Iranian oil.
So, to put that colossal number into perspective, what does 1.4 billion barrels actually buy us? Well, roughly 120 days of net imports. That is 4 whole months of breathing room. If the Strait of Hormuz shuts down entirely tomorrow, this massive buffer insulates our economy from immediate day-one panic. It buys our diplomats time to negotiate, our military time to assess the situation, and our markets time to adjust without the entire industrial sector completely collapsing.
But honestly, stockpiles are really just phase one. To truly survive, we rely on a comprehensive, multi-pronged mitigation strategy. Think of this as our master plan. We've got our strategic stockpiles for immediate crises. We aggressively pursue supplier diversification so we aren't totally reliant on the Middle East. We push domestic production boosts wherever technologically possible. We engage in highly active diplomacy to navigate those great power tensions. And lastly, we implement long-term demand reduction to structurally fix the whole problem over the coming decades.
But let's get real about that second strategy for a second, diversification. We face a very hard mathematical reality here. Now, we have successfully increased our imports from Russia, which is a fantastic strategic move, because a lot of that oil comes via overland pipelines, and pipelines are way less vulnerable to naval blockades and maritime disruptions. However, even our top alternative partners cap out at around 15 to 20% of our total supply. No single alternative supplier, not Russia, not Brazil, nobody, comes anywhere close to replacing that 50% volume we pull from the Middle East.
Because diversification has that strict mathematical limit, our absolute best, most crucial play for the future is actually at home. Ultimately, the only permanent escape from this geopolitical trap is an aggressive push into renewables and electric vehicles. By electrifying our transport networks and drastically improving our industrial energy efficiency, we're basically engineering a future where our structural oil demand will peak and then permanently decline. The math here is beautifully simple. The less oil you need to run your economy, the less leverage foreign choke points have over your national security. But here's the catch. Transitioning the world's largest industrial economy takes serious time, and geopolitics waits for literally no one. We are essentially racing against the clock here. So I want to leave you with this critical, high-stakes question to ponder as we wrap up. Can our massive investments in renewables and EVs actually untangle us from the Middle East oil nexus fast enough before the next major global crisis strikes the Strait of Hormuz? It is quite literally the multi-trillion-dollar question defining the next decade of global energy policy. Thanks so much for joining me in the War Room for today's Explainer. I really hope this helped clarify the incredible complexities of global energy security. Keep asking questions and keep learning.